Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. So real quick, let's review what happened this past week. Wall Street's inexorable bull run took another hit, largely due to a mixed bag of quarterly results from mega cap tech titans, Alphabet, Microsoft, Meta, Apple, and Amazon. The week also saw a flood of economic data, which included an advance estimate on U.S. Q3 GDP growth, a reading on the Fed Reserve's preferred inflation gauge, that's PCE, and the October jobs report. The overall data suggested a continued deterioration in the labor market, an economy that was still chugging along, and an inflation situation that may not be completely out of the woods yet. It kept the Fed on track to deliver another interest rate cut this coming week, and for the week, the S&P fell over 1%, notching its first two-week losing streak since early August. The Nasdaq lost 1.5%, and the Dow shed 0.2%. So which sectors took the biggest hits this past week? Well, on the S&P, it's IT. Information technology lost 3.3%, followed by real estate losing 3.1%, and then utilities shedding 2.8%. Which sectors were up? Only telecom up 1.5%, and consumer discretionary up 0.5%. Now, for commodities and bonds, crude oil, WTI, lost 3.2% to finish at 69.49 a barrel. Gold added 0.3% for the week to finish at 2749.2, and natural gas added 4% to finish at 2.663. 10-year bond yield lost 0.2 basis points, but is still at 4.363. Keep an eye on that yield. So, Uncle Frank, are you mad or disappointed that nothing happened during your two-day atomic time window last week? Actually, no, you should be, because in my opinion, they used the hurricanes and illegal aliens absorbing jobs, which goes unreported, to skew the data. So have we achieved a real soft landing or a fake one? Ask me again after this week. So it's finally here. Election week is upon us. There's so much riding on this event, it would take me 20 videos to cover it all, so I won't. Tuesday, November 5th is the election, of course, and we will also see U.S. trade deficit results at 8:30 a.m. Eastern Time. The two-day Fed meeting will begin Wednesday, the 6th. We'll see U.S. services PMI at 9:45, then the AMC earnings call after the bell, where Zacks thinks we'll lose 7 cents, which could be a year-over-year increase of 22.22% over last year's third quarter. Thursday, November 7th, before the rate decision, we'll see initial jobless claims and U.S. productivity at 8:30, wholesale inventories at 10, the FOMC interest rate decision at 2, and then Fed Chair Jay Powell's press conference at 2:30, followed by consumer credit at 3, and then Archer Aviation will report after the close. Okay, hashtag AMC. Well, guys, for the first time in going on 4 years, I'm not even going to listen to this earnings call. Why, you ask? Because I still haven't recovered from the last third quarter earnings call hosted by the fat degenerate on your right. How could I ever forget? We had the greatest third quarter in our company's entire history, which means we accomplished what they said we would never do again, and that's perform better than pre-pandemic. But we did. And then something amazing happened. The writer's strike ended that very same evening. Adam never once mentioned any dilution plans during the call, so you can imagine my surprise when Adam dropped a huge dilution bomb on the stock pre-market the next morning, before the stock could run. I was expecting a rally that could compare with the big run to over 70 that he also helped destroy. But the most telling thing about that earnings call was, even though the company killed it, even though the strike was over, even though there was no hint of dilution from Adam, after hours, the stock remained flat, even down. I can't prove it, but that told me Wall Street knew what was coming the next morning. But my dumb ass didn't have a clue. And to this day, we pay this guy around $500,000 a week to bleed the company dry. That's triple what they pay the Cinemark CEO, and he solely protects the interests of Wall Street. Our board is still run by an active Morgan Stanley employee who, for the life of me, I can't name one thing that guy ever did for AMC but sign off on the ape. You remember the pounce? We gave away millions of our AMC shares for less than a penny, wrapped in a preferred share named after us, which gave Wall Street exactly what it needed: cheap locates to cover and close with. How did he get the yes voters to go along? It's in the board minutes. He knew they thought the dividend would act like a share count, expose the shorts, and create a short covering event. Of course, this was all planned by Wall Street for Wall Street in our very own boardroom by Citi, a prolific short seller of AMC, with a nearly permanent sell recommendation on the stock, all while acting as our chief investment banker, the author of the reverse split we never needed to do. So even if we kill it on Wednesday, I'm wondering what Adam has planned. I'm wondering if the Limit Up, Limit Down committee will forget to halt the stock into a coma if we got a rally. I can hope for the best, of course, but I will never tune in to listen to this low-life backstabber ever again. You may continue to blame Ken Griffin if you wish, but Ken only does what the SEC permits him to do. The big difference here is we pay Adam to protect our interests, and he sold us out and manipulated us from the very beginning, because that's the kind of CEO he is. Hashtag Credit Suisse. Who remembers this headline? AMC fans mock Credit Suisse as share prices fall below meme stock. That was after they put a 95-cent price target on AMC, right? Fast forward to yesterday. Taxpayers can't pay for misconduct of banks, according to the Swiss finance minister. Karen Keller-Sutter said on Saturday that the country's banks had exhausted the public's goodwill as the government seeks to strike a balance in new financial regulations following last year's Credit Suisse crisis. Switzerland wants measures that protect both the banking sector and the taxpayer, according to the finance minister. This was after plans to strengthen capital requirements ran into opposition from UBS, the country's biggest lender, which bought Credit Suisse last year. You see, politicians only talk like that after the big bank goes down. By the way, Bill Wang of Archegos will be sentenced this month on the 20th. Hashtag Archer Aviation. The boss was on a podcast last week and posted about it on LinkedIn. There's a strong business case for air taxis. The technology is already here. We've built an aircraft to deliver on the business case. The FAA now has all the regulatory pieces in place for our industry. Now you're seeing a shift from R&D to the commercialization phase as we gear up to bring these incredible aircraft to market. Here's an excerpt from the conference.
What is the business case? Meaning where there's a lot of people doing these trips like Manhattan to JFK. It's like 30 million people go from Manhattan to one of the three big airports in New York. All we have to do is have a couple around the city, which already exist. There's downtown, Wall Street heliport, West Side, East Side heliport, yeah. And just put them into the three airports. And that'll be an amazing thing to start with. Okay, so short routes, 20 to 50 mile routes. Now let's design an aircraft around that, the fastest thing we can do to get to market. What is the
As I mentioned earlier, Archer is set to announce earnings on Thursday after the bell. But what is the next thing to watch for on the company's progress? Well, number one, we know the company is on track to complete its Covington plant down in Georgia this year, so I'm waiting for an update on that. Secondly, we need the type cert for the Midnight. As of June 2024, Archer has received its Part 135 Air Carrier and Operator Certificate from the FAA, meaning the next license they need is the type certification for their Midnight eVTOL aircraft to begin commercial operations with passengers. This is the key certification that allows them to operate their electric vertical takeoff and landing aircraft commercially. On topic, we already know that Archer surpassed 400 test flights this year, achieving a company milestone 4 months ahead of schedule. We also know Cathie Wood's ARK sold some Tesla, but bought more Archer Aviation stock. Cathie Wood's ARK ETFs have made their daily trades for Tuesday, October 29th, with significant activity across a range of innovative companies. In a notable move, ARK sold 13,896 shares of Tesla from its ARKK and ARKW ETFs, valued at approximately $3.65 million, making it the largest dollar value trade of the day. On the buying side, ARK's ARKK ETF purchased a substantial 830,000 shares of Archer, totaling around $2.83 million. This continues a trend for ARK, which also added a significant number of ACHR shares on Monday. As a personal warning to my short-selling enemies out there who like to target pre-revenue companies or over-indebted or financially troubled companies, and of course biotechs, institutional ownership on Archer is running just under half the float at 47.49%, according to Fintel.io. So keep shorting this startup with a $6 billion order book almost overnight. I want you to, because there is no Adam Aaron to help you here. Palantir CTO warns U.S. in an undeclared state of emergency. In World War II, America was the best at mass production. Today, that distinction belongs to our adversary. Palantir CTO Shyam Sankar warns that if the United States entered a war with a near-peer adversary, our weapons stockpile would last weeks, not years. We're talking about China. #election. Berkshire Hathaway now has a record $325 billion in cash on hand, the holding company announced after filing third quarter earnings Saturday. The multinational firm, based in Omaha, Nebraska, is continuing to divest some of its holdings and stockpile cash ahead of Tuesday's U.S. election, according to the earnings report filed with the SEC. You know, guys, I'm getting the feeling the old man wants to sit this election out on the sidelines. #XRP. This shit seems scheduled to go on and on, doesn't it? The United States Court of Appeals for the Second Circuit has ordered the SEC to submit its opening brief in its appeal against Ripple Labs by January 15th. Ripple's chief legal officer confirms the appeal doesn't challenge XRP's non-security status. Hopefully, by January 20th, when Trump takes office, Gary Gensler will be shit-canned the following morning. And even with the constant SEC cloud over XRP, 21 shares filed an S1 application for an XRP ETF. Ripple's ongoing legal battle casts uncertainty over whether the SEC would approve an ETF connected to the digital asset. I say it can't hurt to submit the paperwork while we're waiting, right? GME's next earnings date is unconfirmed for Wednesday, December 4th after the bell, but GameStop might have a trump card or GTA 6 wild card in the mix. Not investment advice or advisor. Stay tuned. And now for the basic stats from Fintel.io at the time of this recording. Archer Aviation, short interest, 59.14 million shares. Short interest ratio stands at 4.53 days to cover. Short interest as a percentage of float, 26.57. AMC short interest, 52.75 million shares. Short interest ratio, 8.66 days to cover. Short interest as a percentage of float, 15.71. GameStop, short interest, 35.96 million shares. Short interest ratio, 4.34 days to cover. And short interest as a percentage of float, 8.80%. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.